Hey guys, welcome back. I'm going to be covering a video on how I'm trading UPS to generate over $160,000 of income yearly on a $1 million portfolio. So I think I have a little area here, but and plus the opportunity of getting about 9% yield on a stock. So I'm going to cover how I'm going to accomplish this and show you guys the $1 million portfolio. I know a lot of people on YouTube cover trading strategies or things they do with options, but they actually have like no account actually or no money in their accounts. But I'm going to showcase my accounts and also show you the strategy I'm running. I covered Tesla last month, and Tesla obviously skyrocketed over the last 3-4 weeks, which worked out really well for us in terms of the trade. We are only trying to generate income, but we don't mind holding the stock either in this type of strategy. So I'll just cover this. What we're doing is we're selling cash secured puts, between 30 to 45 days, and that have a 15 to 20% delta, which really means that you have an 80% chance of winning the trade. But it doesn't make a difference for us because we only do this on stocks that we want to purchase. So what's our goal? Right, we want to hold in this scenario, dividend yielding stocks. So stocks that provide some dividends. We don't care about day trading. Like we don't really want to day trade. Don't have time to day trade. We have a large portfolio, so that's key here. You have to have a decent sized portfolio. You don't have to have a million, but you need at least $100,000 portfolio. And you're kind of tired of just getting 4 to 7% returns based off of like a normal high yield savings account or treasury bills, T-bills. We want to try to set and forget, meaning we're going to set it up right now and we're going to forget about it. We're going to go visit it a month or two later and repeat the process. And we want to try to generate between 20 to 24%, annual return, hopefully in a safer manner. So that's the generic template that I have of why we're doing this, and I'll go through the trade. And this is not going to be about Tesla. I just was using this template, but it's about UPS. So I do like UPS. So if we go look at UPS's stock, this stock has been really beaten down over the last year. It's down like 35-40% almost in the whole last year. Like it just elevator, down throughout even the last 5 years. It's just been getting kind of crushed ever since, COVID. COVID, it kind of pumped, and then ever since then, it's just been going down, unfortunately. What I do love about this stock, though, is timing is good right now because if you think about it, the holidays are coming up. So we still have a little bit of time. So we got October, but then November, Christmas time. We got December, we got the holidays. January, people are returning stuff from Amazon and, Target and Walmart. So they're going to be busy when that stuff picks up. And then, we're probably going to get better tariff news with China because it looks like relationships are healing. So it's a great time to buy or trade this stock if you want to own it. But I'm going to show you guys how to own this even cheaper. 8% dividend yield. PE ratio is really good. And then a lot of negative stories. People don't really want to buy it. And, people are just are not really for it right now, it seems like, which is, in my opinion, pretty good. And then FedEx had earnings last week, and earnings weren't that bad. Like earnings were fine. So let's go back to the trade, and I'm going to show you guys how I would do this trade, and show you guys a very hopefully fairly risk-free method of doing this. So the trade setup is going to be selling 10 of the September, I'm sorry, now it's going to be October 24th puts for $77 strike price. So we're going to get a premium of 75 cents per contract, which means for entering this trade, our account's going to be credited $750. So let's just go ahead and do that. I'm in one of my Fidelity accounts. You can see some of my positions and stuff here. And I already have one trade open with UPS at the $80 put, but I'm going to show you the $77 put so you guys can see it. So we're going to go UPS, you go sell to open. And I'm going to show you why I use Fidelity or Schwab. I don't use Robinhood for this, and this is the key. Okay, you have to pay attention to this part because I'll cover why I use Fidelity or Schwab, and I don't use Robinhood for this because you're going to miss out on a lot of money. So the reason I chose October 24th is because there's earnings on October 28th. So we want to skip the earnings, but we want to let it expire before earnings. So right now, 77 strike price. There's a bid ask. It's around 6.75 cents. So the goal is that we would get this entered at 75 cents. So I would just put 75 cents here, and you guys can see the max gain is $750. Max loss, if it went to zero, is 76,000, which is not going to happen. And then the break even price is $76.25. So that's a fairly good discount. That's nearly like a 10% discount on the current price, right? It would be about $8 lower. So we're getting a lot of cushion here for a stock that's already been beaten down. Like another 10% is unlikely to happen right away within a month, especially because there's no news coming out. So as I mentioned, you need to have that collateral of $77,000 to set aside, and it can be on margin. It doesn't make a difference, but you just need to have some collateral. The premium that we're earning, which is the $750 divided by the 77, it's about 1%. But it's only for a 1 month trade. So you just continuously repeat and rinse that, and you're about 12% return on your money. And then this is the caveat. With Fidelity, when you open up puts, when you open up a trade like this, when you write puts against the market, you actually don't use any of your cash reserve balances and until this gets assigned. So this 76,000 is going to continue earning interest on my account at at whatever Fidelity's rate is. So I can go and show you Fidelity's rate right now. So the held in money market, like 75% of my money is held in money market, right? And I'm getting about 4% right here. So we're getting 4% on our money, which is great because so this should be 4.1%, but it's 4% really. That would be another $270 or so that we're earning. So we add the 4% plus the 12%, and now this is the real math, right? We're adding the options premium, we're adding the interest that we're getting of $263. Our total combined monthly return on this trade is about 1,000, and we can get it every month if we just do the same trade over and over. So our annualized yield is about 16%, which is great, especially because the chance of UPS going down to that level is not realistic. Like it's just not probably going to happen. Like the chance is less than 20%. Like I think it's more like 10% or less that's going to happen. But I don't mind holding. This is the part you also have to understand. You do not mind holding these stocks. So don't do this on a stock like GameStop or AMC or something like that because those stocks never come back to like sometimes like they go on these meme runs and then they just never come back. You want to go on a stock that's been around forever that you can also sell call options against or in this scenario you can also get a dividend. So the great thing is right now the dividend is around like 7.7% or so. At the discounted rate, our dividend is going to be 8.5%. So if we end up having to hold it, we're still going to get a really nice dividend from this stock. And we can sell call options against it as well on the opposite side and generate, way above 16% at that point. So this stock is beaten down. It's still a good company overall. Holidays are coming up. If the stock stays above $77, well, we're going to earn 16% if we keep repeating this process. If it's below 77, who cares? We're getting it for a very good discount and we're getting a really high dividend return, dividend yield. And also we can sell call options against it, right? So that's key here is that we can also just flip this trade right back to the market if it doesn't go our way. And we want to skip earnings, right? Like skip earnings. Like this is huge as well. Don't hold this stuff through the earnings, because in earnings, like, they could have some really crazy news saying, hey, we're gonna have to reforecast the next 3 years because of the tariffs, or like all the crazy thing with China, and we're gonna have to maybe mark everything down or whatever it might be. So that would just cause a lot of havoc in the market. So we would do 10 October 24th. We're gonna do the 77 puts, and then we can do 75 cents. And this is really the trade right here. This is the trade. So there's also like these calculators. I don't really use the probability calculator, but essentially this is just giving you, like, by October 24th, the chance, like, of it being three deviations. Let's see. Let me just put price target. What's the price target? $77. The probability is like 17% that it's going to be below $77 by October 24th. So it's, as I mentioned, it's pretty low. So the chance of us collecting this premium is very high. And also, who cares? This is a much better gamble than, if you think about it, like, if you were going to try to gamble to go make this money in, let's just play, roulette, it's a 50-50% chance of you actually making $1,000. And then there's no insurance on the other side. Here, it's like, I'm gonna make $1,000 a month, or if I'll still, you'll always make the $1,000 a month because you keep the premium. But in this scenario as well, you get a stock that you get to hold. And the stock is not a bad stock as long as you pick the right stocks. Like, as long as you pick some big cap companies, or even mid cap is fine. But as long as you believe in the company, it doesn't make a difference, because you could always just continue holding it or just sell call options against it. And I've been doing that with a lot of stocks, like Tesla. I do that with all the time because I like Tesla. Um, right. So I'm selling this 380 put for October 3rd. I'm selling this 285 put, and you can see I already earned 72% on it. This one, I've already earned money on it. So there's definitely a lot of ones I've earned. Like, I'm selling a call because I'm also holding shares of Tesla as well. So I'm selling calls against it. So I'm just selling premium on all sides. But this type of strategy is really what generates income for traders that have large portfolios and that don't want to deal with day trading. Like, this is the big point. If you don't want to deal with day trading, and you don't want to, like, sit on the fucking computer all day, then you want to set and forget. That's really, these are the three keys. You got to have these three ingredients for it to really work. If you have a small account, this is probably not the strategy for you. There's other ways of doing this. But for you, if you got a large account, at least you'd have to have at least, like, because you could do less options, you'd have to have at least 50 to 100,000 to really make this work. If you guys like the video, follow, like, share, subscribe. I'll open up, room for questions, and maybe I'll answer them in the next video. Thanks, everyone.